Hello and welcome again to this episode of Practice Matters. As we head into the summer holidays here in South Africa, an interesting phenomenon plays out that wreaks havoc on law firms' cash flow. With everyone on holiday, no one's paying their bills, and when they get back from holidays, they're playing catch up and can't get to paying their bills. Well, that's the story that's told anyway. But there are other reasons why this phenomenon occurs, and particularly here in South Africa. So I want to unpack these reasons and provide you with some tips to avoid becoming a victim of cash flow crunch beyond your control. For a start, most firms close over the festive season, and rightly so, since it's the longest court break of the year and time for everyone to get a well-deserved rest and spend quality time recharging their batteries with family and friends. As you will see shortly, this is a contributing factor to the cash flow crunch. Before firms close, there is invariably early payroll payments and bonuses to pay, so that everyone who has contributed can have some spare cash for the holidays. Hopefully, before the holidays begin and not during the holidays, if you have a good bookkeeper or tax accountant and you are a solo practitioner or partnership and take drawings rather than a taxed monthly salary, your bookkeeper will calculate and advise you of your provisional tax liability, which you need to pay by the end of December. Secondly, no one is pushing payment of outstanding invoices during this time since they are also on leave. And anyway, those responsible for paying those invoices are also on holiday. Thirdly, when everyone gets back from holiday, there's definitely a lot of catch up to do. And the last thing on your client's agenda, who are possibly also experiencing cash flow crunch, is to pay you. Then you will also, if you are a VAT vendor, have a VAT payment to make, further depleting your cash reserves or maxing your overdraft. Halfway through January, when you're trying to get work fit again and leave behind what are becoming dim and distant memories of the holidays, your bookkeeper tells you that they need to start calculating your firm's provisional tax if you're an incorporated firm, which is due end of February. And towards the end of January, you realize there's not a whole lot of billable fees because, well, everyone's been on holiday. Finally, let's also not forget that even while you have been on holiday and as you run into the new year, you have paid out a whole load of cash. You got very little back in, but still need to pay your overheads. When you look at these events as a whole, you begin to understand why your money seems to have vanished into thin air. So how to solve this very real problem that so many law firms experience? The first step is to be aware that these events happen. The tax and the VAT deadlines, little receipts, but ongoing overheads. With that knowledge, I know for some of you listening to this now, it might be a little late to do this. You can plan ahead during the year to build up your reserves to weather the storm, which is always a good idea to have reserves to weather any storm. Before I give you my top 7 tips on how to manage your cash flow, please take a moment to subscribe to my channel so that you can be notified of new episodes when they become available, and also join our Facebook or LinkedIn groups to ask questions, share your experiences, and learn from your peers on this and other topics. So here are my 7 top tips to build up your cash reserves and steps to not tax, excuse the pun, your cash reserves unnecessarily. Number 1, whether or not you run your practice as a cash practice or on overdraft, you really need to be watching your cash flow very carefully all the time. A good bookkeeper will keep a cash flow report for you listing expected collections from debtors and payments to creditors and for overheads over at least the following 3 months. This report will inform you of what your situation will be over those 3 months and empower you to be able to make preemptive decisions to ensure that your cash flow remains stable to sustain the firm's needs. Our practice management system largely does that for you from the data captured into the system, and has a dashboard widget that you can view over 3 months down to 3 weeks, and is a good starting point if your bookkeeper is not providing you with this information, so that you are not flying completely blind into the silly season or at any time. Number 2, an interesting phenomenon I discovered when I first encountered running a law firm was that kind of, I think by historical default, most South African law firms run everything through their trust bank account. To someone who is business focused, this did not make sense to me. Unless 100% of your practice is conveyancing or claims or collections type work, which needs to be run through the trust bank accounts. If that's not your firm's practice focus, and depending on your client profile and the type of work that you do, you may want to hold deposits from client in trust. I get that. That is good practice until you have a track record of how well they pay their bills. But when you invoice the client, present your business bank account details on your invoice so that they pay into your business bank account. In this way, if your cash flow needs help, you can settle invoices from the deposit and trust if you need to, but you will need to do less work when the clients pay into your business bank account, especially over the holidays. You don't need to do trust transfers to get paid. Since your debit orders run on your business bank account, it makes sense to build cash in your business bank account with the least amount of effort so that you can still enjoy some time off. Number 3, always watch work in progress. I cannot emphasize this enough. Work in progress is your best indicator of how well or how poorly your firm is performing. Having an indicator that shows you how much work in progress has been accumulated during the course of the month informs you on what your billing will be at the end of the month. I'm only happy if by the 15th of the month, work in progress is at least what the monthly overheads of the practice is, which means that anything accumulated after the 15th of the month will be profit. Profit that can reduce overdrafts or be smuggled away in a call account as a reserve for a cash flow crunch. Our practice management system has a number of widgets that inform individuals and collectively the practice management on work in progress. I cannot understand how any business can operate without knowing what their sales for the month is. Your work in progress is your sales, and you need to have your finger on that pulse every day. Not knowing is again like driving blindfolded, hoping that you won't crash. Number 4, one of the things that will not be in our system that our widget can factor in for you is your provisional tax commitment. But your bookkeeper or tax accountant should be calculating your provisional tax payments, whether personal or for the firm, a couple of weeks before they are due, if not a couple of months before for an incorporated firm. This process informs the practice of what the potential liability to the revenue service is, and there is time to make provision in the cash flow for this. I always recommend using the worst case scenario in calculating the liability, rather than under-providing, as this may have implications later on in penalties and interest from the revenue service. How do you make provision for this if you don't have the ready cash? I would suggest, if you find yourself in this situation, to employ a good debt collecting resource to get your debtors book looking healthy, and as a last resort, look to your bank to get financing to carry you through. Number 5, knowing that a lot of your clients don't pay over the period, pretty much from the 16th of December, sometimes until as late as the end of March the following year. Once they've got through their commitments to the revenue service in February too, get your invoices for November out as soon as you possibly can. Having a system that automates your billing process is a great starting point. Number 6, once those invoices are out, get a resource to begin hounding your clients for payment right up and until the 16th of December. Also, keep sending statements. Your practice management system should have that function automated so that they can be sent at the click of a button. And number 7, even if you have billable fees in reserve that weren't billed at the end of November, avoid billing them in December. What? If you can, hold your billing until the end of February, especially if you are a VAT vendor, since you may end up having to pay output VAT on invoices that will only be collected in March or April. The only items I would consider billing over the holiday season are disbursements, since they have a zero-sum effect on your VAT liability, since you can claim the input VAT against the output VAT if the client has not paid the disbursement invoice. The reasoning being that if the client pays, then at least you will not be out of pocket when that disbursement is due for payment by the firm. I hope these tips have helped and inspired you to be proactive in managing your practice, knowing what information you need to make informed decisions to establish a healthy cash flow. As always, if you need more guidance, you can always reach out to me on jenny@dryrevenue.net or catch up with myself and your peers on our Facebook and LinkedIn groups. The links are down below. And don't forget to subscribe to my channel to be notified of new episodes when they're available. Next week, I will focus some more on work in progress, managing resources, and how to predict the future success of your practice. Until then, be open and get billing. Cheers for now.